Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Monday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick with you this morning. We're going to talk about what stocks Warren Buffett bought and sold last quarter as disclosed in his 13F on Friday. It did cause some stocks to move on Friday and more so again this morning. So we'll talk about that. Retailer earnings is going to be the theme of the week. We'll talk about that with our guest, Ryan Craver at 8:35. He is the founder of Commerce Canal and our retail expert. So retail is the theme of the week. Like I said, not really any earnings this morning. We have JD.com, but a number of analyst ratings that are, or analyst commentaries that are of note. So we'll talk about that as well. That's it for me as far as things on my radar. Don't forget to hit that like button. And Joel, what happened here overnight?
Trading up by 10.5 handles. A little bit of a choppy week close. Bidders came in right away. Our open 66. That's only $1.25 off that pre-market low of 64.75. Pre-market high 76.50. We don't care about that. What we care about is the 3-day trading range hitting a spy in the S&P.
Wait, can I interrupt you? I just turned your charts off by mistake, so grab them back.
Oh, Spencer.
I'm sorry. That was my mistake. Monday morning blues.
Spoos in a 3-day trading range, 30 handles or 3 points in the spider. We got that clear bogey on top. We got 4 highs, not a triple high, but quad high. That's what we got to bust through, 82.5 on the upside. We have crude down 10 cents here at 41.91. And then you have gold. Gold's got a little boost because of Mr. Buffett, right? Buying Barrick Gold. So gold is getting a boost today. Silver is in the green too by almost $1 at 27.07. And Bitcoin, we'll have a little discussion on Bitcoin here this morning. That is over $12,000, $12,050. That the futures are up $115. So we'll bring in Triple D here, and boy, oh boy, Friday seems like a long time ago, but
doesn't it?
How is he? Yeah, how was your
remember
weekend?
what happened Friday. I don't even remember Friday. It's too long ago.
I'll tell you what happened on Friday. Warren Buffett just
13 Fs.
He bought a very small stake in Barrick Gold. That was the news on a Friday afternoon.
In 13 Fs, it's so ridiculous. It used to be like, oh yeah, we care about multiples. We could look at other hedge fund managers. What were they doing? And now it just seems like the market cares about Buffett, and that's pretty much it. That's what gets the immediate move. But the moves are so extreme off of Buffett. I mean, here he takes a small position in Barrick Gold, symbol GOLD, and the stock pops 9%. I mean, if I was Buffett, I'd ring the register here right now. That's a big move for Barrick Gold overnight. This isn't like some, little tech stock, penny stock. This is Barrick Gold. It's one of the biggest gold producers in the world. And it was obviously not doing well the last 3-4 days. And it comes right back up into its major resistance point of 30. I don't know. But just because Buffett bought it, to think it's worth 9% more today, I think is absolutely ridiculous. I think it's a ridiculous move. If I was in this for a trade, I would say, thank you for the free money, and I would be selling it here this morning into the pop. What are your thoughts here? Because it's getting ridiculous that, a company as big as Barrick Gold getting 9% pop off Warren Buffett.
Well, I mean, it's like you say, he wasn't buying it here. He's been buying it over the last quarter. This is a real big
It's
move.
not even a huge position for him.
I'll tell you when.
Okay, go ahead.
He bought it between 18.50 and 28.25.
What do you mean 18.50?
He bought this $18.50.
Oh, he bought this during the crisis. So it isn't like he's buying it now. So yeah, so you're chasing Warren Buffett this morning, who bought this at $20 and it's 30. Well, if I'm Buffett, I'm like, okay, this is the time to ring the register. I just made 50% of my money. And these people are buying it from me here this morning because it's disclosed 45 days later. I mean, this has always been the problem with the 13Fs. They lag so much. So this was bought back during during the COVID crisis, the beginning of it then.
Yeah, I mean, we always say that before
crazy.
the 13 has come up. Yeah.
Anyways, they're buying it up there. 30 major resistance.
Yep.
I would sell the hell out of this, in my opinion. Does it hold up for a day or two? I mean, gold's up. That's helping it. It obviously moves with gold. And obviously, if gold continues to move higher, this will be helped out too. But this is just a 10% bonus for whoever had it overnight. And, and it was difficult. Like I was looking, when it came out, I was like, oh, maybe I'll buy some of that bear gold. But the algos are pretty fast on it, and they rip it higher. And you think, okay, you're going to trade out these 13Fs. I mean, unless you've got the algorithm written, like the process to do that, it's not like, oh, it's just a press release. Warren Buffett bought bear gold. It doesn't come out like that. Like, tell us how it comes out, Spencer. They release the 13F. They release all the holdings. So you got to do some comparing to be able to come up with that next headline that says Warren Buffett bought gold. And by the time that's done, the algos have already ripped it higher.
Yeah, they don't come out and say, hey, we increased our stakes in X, Y, and Z, and we decreased our stakes in A, B, and C last quarter. They just say, hey, here's what we've got. And then you got to go to the previous filing and compare and contrast. So yeah, exactly. So I did it. I mean, I do the Buffett, and I was trying to do it before anybody said that he bought Barrick Gold. I was sitting there comparing, and I've got his holdings sitting up there on the spreadsheet. And then I open the press release and I start comparing, and I actually went through and I'm comparing all the way, and I'm going through, and I ran over Barrick Gold because it was such a small position. I didn't even notice it off the first comparison. And then I went back and then I noticed it. But by the time I had noticed it, and nobody had really even was published, that like I hadn't hit major media yet that he bought it. It was already trading up in the 28 handle. And I'm like, well, am I going to chase this up $1.50 now? I'm trying to do it fairly quickly. But I mean, if you have an algorithm written, like think about the logistics to, that algorithm, what goes into it, it's pretty impressive to be able to have that written. You have to have the spreadsheets loaded into some type of Excel format. And then your algorithm has to be able to read the press release, know which press release to extract from, then be able to download it into a spreadsheet, compare the holdings, and then decipher which is different, and then make a trading action off of that. It could be done, and I'm sure it is done. You can see it's done, but it's pretty impressive.
29, we're just off the highs of the pre-market session. We just got to 29.66, and then you see this high just under 30. So that's, if the bulls really want to run with this, we'll take it through the pre-market high. We'll take it through 30. I got to imagine after falling off from 30.5 down to 26, some people are going to be reloading there. It's a NASDAQ stock, but 30 psychological level. It's over half of the rebound there.
GOLD is New York. It's not a NASDAQ stock. It's a New York stock, just to clarify. I know we used to always look for symbols, NASDAQ. It doesn't work.
I don't know. Then TradeStation must have it messed up.
It's New York. Gold is New York. GOLD is New York for sure.
Okay.
So TradeStation.
I thought it was too.
It is.
But,
it may be from the merger. They might have never, because remember that symbol when they merged with, who did they buy? Because it was ABX, and then they merged with, I don't even remember, Randgold?
It was Randgold or Gold Corp?
Randgold, I think. It was Randgold. Yeah. And so maybe Randgold, I can't remember if that was NASDAQ, but maybe that's where it's getting screwed up from. But Barrick Gold is NYSE listed.
Yeah, but Joel's right. TradeStation does say NASDAQ, so
so it's wrong. It's
sorry about that, guys.
No, it's obviously a mistake on TradeStation.
So I think maybe the combo that it's Warren Buffett, and then you get the headline, oh, he bought gold, and that could be referring to the ticker, but it could people just may see the headline, oh, he bought gold, and think, oh my God, I gotta go buy gold. And so,
that there's something to that too. Yeah. I mean, it's not surprising that gold's up. I wouldn't be surprised if he's getting so much press this morning. Buffett bought gold. Buffett bought gold. So you see gold trading up now, GLD, and you think, well, that could have something to do with it. I mean, but look when he bought it. He bought it back when he was dumping all the banks, and he thought the world was ending. I mean, obviously, when Buffett's selling, at a loss on a lot of different things, he was very concerned about, we don't know what's going through his mind. I don't know if it's disclosed, but he's concerned about the economy. And when the markets fall 30, 35%, he was hedging himself up, and it was a fantastic buy. I mean, what price did you say he bought at?
He bought in a range of 1850 to 28 and a quarter.
Okay, so he bought it all the way up. But I mean, that 1850 buy is impressive. gold was in trouble, $12.65. I mean, they were selling everything back in March. And we know if you bought anything third week of March, you're laughing. Anything you bought, you're up significantly on, and this is no exception. But now you're coming in. If you're coming in this morning, you're buying this. You're so late to the party because this was bought back 3 months ago, potentially 3 months ago, right, Spencer?
I mean, that's what we said.
That's when those prices were there.
So late.
What else did Warren do?
What else did he do? Great question. I'm glad you asked, Joel. Well, we know he exited the airline. That's not news. We knew that from a while ago. That came out though. But that's in this 13F as he got rid of the airlines. He got out of Goldman Sachs and cut his stake in a bunch of other banks
Wells Fargo,
except for Bank of America. He decreased his stake in Wells Fargo, U.S. Bancorp, Bank of New York Mellon, JP Morgan, PNC, and I mentioned he exited Goldman Sachs. But he has been raising a stake over the past few weeks in Bank of America. That's kind of the exception to that. So
he raised his stake in Kroger too. If you see Kroger this morning trading up as well, if you're wondering. He was getting defensive. I mean, think about this: buying gold, selling banks, buying gold, buying Kroger. He was getting defensive. I don't know. Maybe he's changed his mind since then. I mean, I don't know why he'd be playing defense when the market's playing all-time highs. He could be doing completely different stuff here now. But that's why it's so hard to trade on these 13Fs when that information is so late. Like we talk about, when we see, the SEC filings and you see those like Bank of America, we know is doing it. And those are only a couple of days.
Right.
So that's relevant information. I just think when you come with these 13Fs and they're 45 days old, it's tough to just make a trading decision on that because he might have changed his mind completely from where the conditions for the market 3 months ago were completely different from where they are now. So it's tough to come in here and just buy gold because you think, oh yeah, Buffett's in, I got to get in too. If you like gold for other reasons, total different subject. But if you like gold because Warren Buffett bought gold, you're late to the party.
I mean, the only reason they're notable is really for gold this morning. Like moves like gold this morning are why we pay attention to 13S because this is the sole catalyst, right? So
yeah, GOLD.
And yes. I can remember even when I started doing the show with you guys, it seemed like other fund managers had the power to move stocks. Icon, Ackman, Einhorn, not so much these days. As you've also
you never hear from Icon anymore.
Dennis. You don't, and they don't have the power that they used to, or they're just not doing as much. Maybe Icon does, but a lot of the other fund managers, like you said, Dan Loeb comes out with stuff today. So do this to give the example of what Dan Loeb did, and do the comparison. Dan Loeb's a hell of a hedge fund manager, great hedge fund manager, but nobody's following him. Give the stocks today, and I'll tell you what they're doing.
Yeah, I think this is this morning because I didn't see it on Friday.
Okay.
So,
but we know. So we got Dan Loeb, similar to Warren Buffett. So we'll buy Buffett up 9%, but we won't even care what Dan Loeb bought. It's insane.
It's a new stake in Activision Blizzard, ATVI. New stake.
It's up 50 cents.
New stake in Square. New stake in the Gap GPS.
It's up 20 cents.
And he raised a stake in Disney. So
Disney's trading down. So you can see the difference.
Facebook.
You raised his stake in Facebook?
New stake in Facebook.
New stake in Facebook's so big, it's going to be hard to impact there. But gold's big too. So you can just see the difference. Here you have two hedge fund managers. Dan Loeb's excellent hedge fund manager. It's just Buffett is so widely followed and everybody's hungry. And I did the same way now because it's like, it's self-fulfilling, right? When I don't see the other hedge fund managers doing it, I don't even look at them now either. So I know Buffett, I'm sitting there and putting extra work into it. And I was sitting there trying to compare, trying to get ahead of it. And you just can't beat the algos. And so you've got to have an algorithm to go spend yourself, a couple $1 million and figure out how to rate that algo. And you probably can make some money along with the other, major hedge funds, trading HFT firms that have done that. But it's a difficult game.
Let's talk about Kroger here, and it's just interesting, just from a technical perspective. Someone got real excited. This probably was the after hours. Very little volume, took it up to 36.45. We're still trading in the green here. We're at $36. Someone had a little inkling that Mr. Buffett may be adding to his position because this stock had a nice day on Friday, broke out at 35.5. Settled a little bit below there, but
it did have a good day.
It did have
leaks at Berkshire. No,
36. I'm still going to use 36 as the bogey here. Holds 36. You're talking about another, leg up, another leg up on the upside. And your post-COVID high is even above that. Where was that? That was at boom, boom, boom. I think when people got crazy that one day in Kroger.
I still like Kroger. I mean, I've liked this for a bit. I bought it back there probably when Warren Buffett was adding to it. I bought it back during the COVID crisis as well, 28, and then it just ran so quickly and got up to 32. I had it for like 7 days. I made 15%. And I sold it. I thought that was a pretty good move for Kroger. It turned out to be not a bad sale. It didn't go anywhere for 3 months, but now it's starting to go up again. So I like Kroger on a pullback. I don't mind. I think the stores, look good too. I mean, they've changed the whole dynamics to the way these stores are. These super Krogers, they got everything in there now. So I'm kind of a fan.
36.84 was your high in March when everything the stay-at-home play just exploded. So keep an eye on that. We haven't hit that. What is the symbol for that Albertsons that recently IPO'd?
Is it ABI? Is that it?
I should know it, and I forget it now.
No, it's not.
I've traded it too.
It's ACI. ACI.
There you go. Yeah, the old Arch Cole. ACI.
Oh, yeah. How's that done?
Nothing. It don't look bad on a chart. It's kind of consolidated, but it's not it's definitely not uptrending. So if you want the trend to be your friend, there's no trend here at all. It's just kind of hanging out. But you're somewhat near support, so you could see a little double bottom for me. You can make an argument if you wanted to give it a shot. If you thought this grocery store trade could get hot, I don't know why, but 1444 is your low of the move. That would be my stop out point. I don't want to see a trade below that, and I definitely don't want to see a trade below the 1372, which is the low since the stock has become IPO.
Yeah, so, it's just kind of meandered. But
think about it. Like, what's the story? We talk about this show.
I'll give you a story.
Drivers or stories. Give me a good reason, a story behind Albertsons and a reason to buy it, because I can't think of one.
I'll give you a story for the whole grocery store sector.
Okay, give us.
If you think that not COVID, but the regular seasonal flu will be bad on top of COVID when it gets to be flu season, then there's your argument for grocery stores.
How is the flu season going to be bad? It's going to be so much better. You know why? Because there's a lot of people still practicing social distancing. So that's got to improve flu. I think it's going to be your best flu season ever. Because people aren't on top of each other.
Well, if you think that COVID is plus the seasonal flu will make things worse again,
COVID could get worse.
Plus the seasonal flu, we're not even there yet. So if you think that's going to make things worse again, and we could see another, March situation in terms of just run on toilet paper and that sort of thing, then there's your argument for grocery stores.
I think it's just a matter of if COVID gets bad again, because I think with the people practicing social distancing, I think the seasonal flu is going to be it's going to be one of our best years for the seasonal flu coming up, because people just aren't on top of each other to spread it. Like I'm not sending my kid to school. So, he gets the flu 3-4 times a season. With him not going to school, he's probably going to get the flu less. So it depends, I guess, on, obviously the COVID situation is always a wild card, but the market has completely discounted any risk of COVID now. And I'm not going to argue with it. I was, rah, like COVID is scary. And, I've loosened up too. So, it doesn't seem as scary as it did. We get the death tolls and, the market just doesn't care. We're making new all-time highs. The market gives zero risk to COVID. Now, there is a good point. It could, maybe the second wave comes, maybe it starts to get ugly in September, but people are wearing masks. They're being a little bit smarter about it in a lot of places. And you know what? It's just not as deadly as we thought it was. So
I'm saying if you think the seasonal flu will be bad, with kids are going to school, they're going to get it, they're going to bring it home to their families. If you think that, there is your story for the grocery stores. That's what I'm saying.
I just think grocery. The whole thing. Whether we have a bad flu season or not, whether or not COVID ever have an outbreak again. I just think there's been a fundamental shift in people's behaviors where going out to eat and spending the extra amount of money, the money that could be saved, the quality of food's better. I think Warren is totally on with this one. I think it's
like
a generational thing. I just think we're going to lose a lot of restaurants. Going out to eat, how many bucks can you drop there? having people over, cooking meals. I just think it's a generational change.
Everything has changed the way people are spending money right now, and people like the outdoor activities, people are all over it. Like we were looking, and at boats, and my friend selling one of his boats that he had bought last year for $10,000, and people are buying these boats for over 20, like used boats. So even used boats, which never go up in price, have just flown in price because people right now want to do outdoor activities. Like, I need a boat. It's like scrambling and you throw an ad up. It's the same thing with the housing market. The housing market has exploded in a lot of markets because there are a lot of people that are like, man, I was stuck in an apartment for 3 months. I don't like this apartment living anymore. I want to move to a house. So you've seen, a lot of consumer changes, and some of these are going to be permanent. Some of these are going to be temporary. You make a good point on, do people come in now and they, maybe don't go to restaurants as much as they used to? I mean, there's, obviously, and maybe they don't travel. Maybe they like their new style of living. Maybe they're ordering online more. A lot of these changes can be more permanent. Some of them are temporary though, and that's still to be determined which ones are permanent, which ones are temporary. But either way, the grocery stores, people go to the grocery stores, and obviously, so there's maybe a bull case there, but I tend to like the Kroger better, where it's been an uptrend. Just looking at, if I was comparing Kroger to Albertsons, I always like my stock trending up. Kroger's trending up, Albertsons gone nowhere. So, the natural flow of money tends to chase price, and ACI, you don't have to chase anything. It hasn't gone anywhere.
Hey, speaking of consumer habits, is there a more obvious candidate for an earnings beat this week than Lazy Boy? They report, I think, on Thursday. I mean, everyone's stuck at home.
Yeah.
They were buying Lazy Boys last quarter, right?
Do they sell a lot online though? Like how that would matter, because if they're obviously have to go into the showrooms to sell your Lazy Boy, people weren't doing that, or if they're buying them online, then there's a case there. I mean, anything to do with home furnishings is done well. I don't tend to think that Lazy Boy. I don't know. Maybe.
I mean, unless you know what you want, I mean, then you can get it online.
Yeah.
But yeah, I mean, we always talk about this.
When's it report?
Tomorrow afternoon.
I've always thought this stock is a dog. It's come back a long ways from those lows. So it got down $15 at 32, 33. I mean, you're getting to a point now, okay, even if it beats, I mean, where's it going? 35, 36 is major resistance. It's just some stuff's come so far back. It was in the gutter. Now it's coming back up to where it was pre-COVID. All these stocks come back up to where they were pre-COVID. It's hard to be bullish on a lot of these stocks here. Like, it's still the Lazy Boy story. I know, Michigan ties and stuff, but this is not a bullish
long-term trading range. I mean, we've been talking about this stock for years, and it just seems like
it goes nowhere.
22 to 32. You know, and you get below, you got to the under 20, and you've been over 32. But if you've been, just patient, I guess you haven't. Yeah, I mean, this is on a monthly. I mean, you would have had 4 or 5 shots to catch it. I mean, if you were aggressive and, did more 24, 32, but trading range, see, I hope they have good earnings. Hope people are home reclining in their Lazy Boys. I don't know. We haven't done your Lazy Boy chair story in a while.
Well, maybe do it on Wednesday. We'll see if we have time.
All right.
Alibaba, people are talking about, has bounced back, got some negative press from Trumpster. What do you say?
That's all you need to know, is he got negative press from Trump.
Yeah.
He basically just hinted that Alibaba would be the next domino to fall in terms of potential.
Specifically mentioned Alibaba.
Yes, he specifically called them out as being like, okay, I've written executive orders on ByteDance and TikTok and Tencent to an extent. Baba could be next.
And the stock was hit significantly on this. It actually traded down to 250 this morning. It's come all the way back, and we're now trading scratch because that's what they do. They buy the dip on all these stocks. It's in consolidation station right now. I'm long Alibaba, full disclosure. I've had Alibaba, bought it a year and a half ago at $140, I think, or $150, and I'm holding it. I'm going to continue to go with it. It's one of my only stocks. Like, I have some emerging markets funds, but of straight direct holdings, Alibaba, I believe, is my only Chinese stock. It's in consolidation station. I'd say as long as it's above 240, the bulls are still in control. If this thing ever starts to leak and starts to lose the 240 area, then that's concerning.
Yeah, it did have the dip under 250, or it didn't quite get to 250. Went to 250.15. I mean, you're calling 240. I mean, 250 for me. You know, if it loses that,
Short-term
I don't know.
support.
From a longer term perspective, that's been holding up. But you know, unchanged now since it was down that far will be an important level. And then also yesterday's high in Alibaba.
I mean, it's scary to own any Chinese stock to a certain extent when you've got Trump, and obviously you've got major headline risk. And we know, you know, we're going to be in a trade war here eventually. Trump is not pleased with everything over in China. So we're kind of at, you know, in a little, you know, war with them to a certain extent on multiple grounds. So, you know, it's somewhat concerning. So to own, you know, a lot of these Chinese stocks, I wouldn't want to be overexposed to China right now, just for all those reasons. But if I'm going to own a Chinese stock, I think Alibaba's best in breed.
Three highs, right? 250, between 256 and 257. So call 56.5 your major resistance today here in Alibaba.
All right, while we're here, let's go to JD.com. They had earnings this morning and they were great. They blew away the estimates for the EPS and for sales. EPS 50 cents versus a 38-cent estimate. Sales of 28.46 billion versus 27.45 billion. So blow away earnings report for JD.
I mean, this has killed it. This is a pure COVID play. You know, buying stuff online, JD.com. We know they've even talked. The company has said that they're rocking and rolling, and it's not surprising that they, you know, beat it significantly again. Online sales just driving this company. So up 6%. Stock's been firing on all cylinders. 69.18, that high of the move. That's your major resistance point. Until you get above that, then I don't know if I'm chasing it, but it's been an unbelievable performer in the last 3 months.
Yeah, trading right here at the highs of the pre-market session. You're trading 66.30. That pre-market high is right there, so not really a daily high to lean on here. You see the 65, just over 65 was your previous resistance. I don't know. Let's see what these two highs are here. Those two highs are 66.35, 60. Yeah, there. Keep an eye on that. Two daily highs at 66.35 and 66.5. We did just touch there briefly. Have fallen back into the 65 handle. So potential target there. I don't think we'll see that 69 and change on it today, but definitely a good up 344, up over 5%. Got a good report for JD.com.
Yeah, Jane and JD kind of only the earnings report for the day. If you look ahead to this week, though,
what do we got? Retail earnings season.
Retail, yep. Walmart and HD and Kohl's tomorrow morning.
That's big.
Actually,
day.
I have a list here. Let me pull it up.
Yeah.
Here we go. Okay, Walmart, HD, Kohl's tomorrow morning. I mentioned Lazy Boy tomorrow afternoon. Wednesday morning, Lowe's, Target, TJX companies. Thursday, it's Alibaba and BJ's in the morning. Ross Stores Thursday afternoon. Friday morning, Foot Locker. So it is the retail earnings week. Target being Wednesday, Walmart tomorrow. Those are going to be the big two.
I mean, Target's at all-time highs. Walmart's not far from all-time highs. Kohl's is still kind of in the gutter. I mean, the themes are so, you know, apparent here. You know, Walmart, Target, the bar is very high for them. Are they going to get above their high bar? Kohl's, the bar is very low. Are they going to find a way to come in under that low bar? I mean, it's, you know, it's not rocket science to figure out who's going to have good earnings and who isn't. It's just a matter of where those bars are and the expectations going in. So, and that's still to be determined. And that's market sentiment too. I mean, obviously, if the market's holding up and making new highs, you know, stocks and the reopening trade stays hot. Kohl's a pure reopening trade. They're not selling us a lot of stuff. Kohl's isn't a huge online seller. So it's all about, for Kohl's, it's all about the reopening. And you watch the reopening stocks, Boeing, Airlines, Kohl's, they all tend to move together. So they're grouped together and the charts look similar. Target and Walmart, you know, are to a certain extent still COVID plays. They're going to have their sales. They kind of work no matter what. So the Walmart chart looks like it's in consolidation station. I think they're probably going to blow it away. Maybe the easy money was just to buy it over the weekend because people will be talking about it today because they're reporting tomorrow and it's already trading up 1%. So obviously, you know, I know how I like that strategy where I buy a stock a couple days before and then I sell it before the earnings report, like at 3:59, so I don't have to take it through the report. Obviously, they're reporting tomorrow morning, so you'd have to sell it to close to not take it through the report or in after hours. But I mean, the Walmart report's going to be good.
But see, this is weird because it had that big red bar that you see May 18th. That was when it had a good report too. And they
Yeah.
just sold this thing after the
Yeah.
report, and they sold it, and they sold it, and they sold it, and took it down under 120, got it to 118. That big green bar is when they announced that wasn't the Amazon. Were they?
Yeah, it was.
It was
The
the
big green
Prime.
bar was when they went and on the shipping, they announced, what was it, like
Walmart Plus or whatever.
I was gonna say Walmart Prime, but Walmart Plus.
Yeah.
To compete with Amazon Prime. And they know what, it's gapped and gone since then, and it hasn't really, and it's consolidated. The chart doesn't look bad, but again, charts don't mean much because, like you said, Joel, on the last earnings report, they killed it and they gapped it up in the morning and then they nailed it down all day. So we know they will sell stocks on good earnings sometimes. And
yeah,
it's so hard to predict what that earnings reaction move is going to be. In some cases it's easier than others, but in this case, it's like, the earnings is going to be good. It's just a matter of, what's it going to feel? Well, they weren't good enough. Or what do they say going quarter? They, saying, okay, yeah, we killed it, but, going forward, we don't know. It's tough to just say they're going to kill it, so the stock's going to go higher. In a case like of JD.com, it was maybe easier to predict that because it's not so widely followed that everybody's like, oh, JD.com killed it. Everybody isn't talking about JD.com, so maybe don't expect it as much because they're not thinking about it. Walmart, everybody's thinking about it. Everybody knows Walmart's going to kill it. It's just a matter of, are the expectations too high?
Yeah, and this one too. I mean, you're butting up again. I mean, you are making a new all-time high here, right? In the pre-market session, we've never cleared 134. You did get right to 134.13. I think with this one, I think maybe what the big boys may do instead of like selling ahead of the report. I mean, if let's say they get a blowout number and they do, and they just start to, take it up like a buck and a half, $2, $2, $2.50, $3, then I think you might see some big boys coming in, taking some profits and, a good report. And then, I mean, how many times have you seen Walmart a lot of times on earnings, open up $2.50, $3 and then end up red on the day just because the volume that it takes to move the stock during the normal session. So
it's big volume.
Yeah,
it's thick
big
too.
Volume.
It's a really
I
thick
say
stock.
the big boys let them walk it up, and then they come in with their big size orders. So, anticipating should have a good quarter there at Walmart.
Let's talk NVIDIA. The chat is buzzing about this. It's up another 12.
Jeez.
That NVIDIA also reports this week. So they're Wednesday. So it's not just retail. We've got NVIDIA reports earnings Wednesday afternoon. John Deere is Friday. GAN is Thursday. So there are
going on?
There are some non-retail earnings of note this week.
Price target raise, Joel. It's just whatever reason. I said it on Friday. I mean, the trade is just buy NVIDIA overnight. It goes up every morning. Every morning. The market's down, NVIDIA's up. If the market's up, NVIDIA's way up. It's like it doesn't seem to matter. I said the stock's going to 500 30 points ago. I didn't participate. I did it through the AMD. AMD has been okay. NVIDIA has been even better. I still think it's going to 500 sooner than later. People are all stock split happy now too, and they think NVIDIA is going to do it too.
Oh, there you go.
So there's another catalyst driving it. I don't see NVIDIA slowing down anytime soon. If it has disappointing earnings, it probably pulls back and they probably buy the dip on it. This stock is just awesome.
I don't know what to say. 476. That's the only thing I can give you. Who raised the
Wells
price
Fargo? So 430 to 510, and they're like, oh, Wells Fargo at
what if I sold it at 430 on their recommendation?
That's why they raised it to 510. They don't want anybody more selling it. Joel, it doesn't even matter. There's so many analysts chasing price on this now. This stock is just the most loved stock out there from one of the tech stocks, darlings. And yes, the valuation is high, but it was never like it is high. It's extremely high compared to look at the rest of the sector. And but I mean, this is the best of breed, so they're going to pay a higher valuation. NVIDIA 500. I think it's coming.
And
it might even come this week with the earnings.
And let's just look with your AMD. How's that spread treating you?
I'm up $1 in it. Like I said, if I would have did the the stock, I'd be up like $3 in it. So you don't make as much when you do a spread like that. If people are in less than I bought the 80 calls. I sold the hundreds against it for $6, which obviously the max gain on that would be 20 points, but I have the 6-point outlay. So the most I can make on that's 14. I did that to January because I said I think AMD is going about to 100 by the end of the year, so it was the way I was going to profit from it. I should have did the same thing with NVIDIA. I thought about it. I should have bought the 450s and sold the 500 and did the same thing with NVIDIA too. So there's ways to play these things when you have targets that you don't just have to buy the stock if you don't want to. The options isn't a bad way to play it, although you make more money if you just buy the stock.
Yeah, I'm just trying to look at this, do your 50% for you. This is at a real important impasse. You made that all-time high at this, call it 87. Let's call it 10-point drop. 5 point is 80, this 82 pesky area, Dennis. I'd really like to see this.
Bit.
Yep. I'd like to see it. It's popped over 82. It went to 82.88, 84.02, 83.24. Only one close over 82. So I kind of could get it today again, but we'll clear the way to move up to all-time high there if it holding in 82. But if you were just playing it for the bounce and you were looking, hey, I'm going to buy it on the cheap, like that day that you did buy the spread, and you're just looking for the rebound, then you're right back at that 50%. My top line is a little bit off there, but just doing the math, it comes in the 82.
I like your lines, Joel.
Thank you, Dennis.
All right.
Got to remember doing more.
We got Ryan?
We got Ryan here. Ryan Craver is our retail guru. He's the founder of Commerce Canal, joining us now on PreMarket Prep. Ryan, good morning.
Morning, gentlemen. How was your weekend?
It felt long, actually. I got to say, it felt like a longer weekend. I don't know why. Ryan, we were just talking about retailers and who has the high bar, who has the low bar. You would probably agree with that. Walmart and Target have the highest bars to get over, but looking beyond them, who else has some high bars to get over this quarter?
Well, I think pretty much everyone in off price. So if you look at the way that TJ Maxx has traded, top line's going to be down at least 30%, just given how many stores were closed. Any guys like Burlington, Ross, TJ Maxx, like I said, I think Costco is definitely trading at a premium. It's a little befuddling to me as to how all these retailers have traded with us all knowing that the majority of their stores were closed or were running at a lower capacity. I think Dennis hit the nail on the head earlier talking about Walmart. So Walmart has some very high expectations. It's trading at a major premium. We know very well that they've now delayed their same-day delivery and their two-day delivery program. They've tied up with a company called Instacart because they acknowledge the fact that they are not ready for this coming Q4 in terms of delivery. So I'm not too excited about them headed into this. You look at Target. Target had already acquired a company like Ship to be focused on their delivery previously, and they don't trade at nearly as high of a premium. So if you're going to play the two, I might go with a Target.
Ron Ruth, Ryan Craver, our retail analyst. First of all, Ryan, I just want to ask you more like on a personal note. I know you're in New York City there, and I got some encouraging news over the weekend. My niece, who has been out in the suburbs with my sister since March 20th, moved back into her apartment into the city. She's still not going to be going into work and everything. So just, I think I think that's a great sign. I don't know if you ever left or what your situation was, but New York's a really important city to the world and the world economy. I just get your take on how things are in the Big Apple.
Yeah. So on the positive side, this morning was the first time I didn't have a seat on the subway in from Brooklyn. So it goes to show that people are starting to move and come in and work. This firm here, our firm, it's less than 20 people, but we've been back in the office as of the start of this month. So, start of last month. So we've been going for it for a while now. It's definitely a lot slower. It's not nearly as busy as you would normally expect. But I definitely see a pickup in actual people, and business seems to be starting to.
Good sign. Move. All right, I want to go to the call of your life here, the best call that you ever made. And folks, I mean, he took some heat on it originally. Stamps.com. You stuck with it after the first uninitiated stock split. And then you stuck with it again when it went down to, oh man, this thing got under $50.
Under 40, I think
Under
it did, Joel.
$40. Now everyone's gonna make fun of me here because I'm showing my age, okay? But I got this from them. I'm not gonna show my password. I got this in the mail, okay, from them. And it prints your first 9 stamps now. And I'm kind of struggling with it, Ryan. I mean, it says I've actually printed the stamps.
Joel can't figure out how to use it.
But do I like cut this out? And they said it not to put tape on it. So what? Do I need to go get like sticky paper? What the hell's going on with this? I've actually wasted like a couple of my free money here. What do I do? Do I just cut this out and put it on an envelope?
Teach Joel how to use Stamps.com. That's your test sheet, Joel. That's just for a test.
When Spencer sent me the invite, last week, I didn't anticipate this being a tech support call. I thought this was more like
me neither. All right.
He's like, this guy called Stamps.com from the bottom. He's got to know how to use it.
Glue stick? Can you glue it? Is that what you do? Because it doesn't really look like a stamp.
Look, I stick this on my letter. Is my letter going to get there?
I want to do it.
I want to know.
I would just head to stamps.com and they'll definitely show you.
I've been watching the videos. I've been doing it. It's spent a half hour on it.
So his argument is that it's not that easy to use. Does that
get it?
What are your thoughts here now, Ryan?
And then I went to Walgreens, and Walgreens is not selling stamps anymore because they're in a dispute with the post office. And then I went to the post office, and that darn machine wasn't working for me to buy stamps. So I'm really upset. But anyways,
he's
go ahead.
desperate for these 9 free stamps. Yes. What are your thoughts on the stock now, though, Ryan? Like, it's come from $32, and you obviously made a great call at the bottom. Are you still staying on the bull train? This thing got up to $325. It's $278. It's wild in here right now. What are your thoughts here now?
Yeah, I mean, prior to last earnings, I was holding on for dear life. So I held it into earnings. I sold after they reported. The fundamentals behind the business remain the same. So I did sell it, but then I got back in around the 280 level. If you look at the USPS, forget about the news because people are still using it. It is 40 to 60% cheaper than UPS or FedEx. E-commerce is on fire. Stamps.com, Indicia, ShipStation, all of those are owned by Stamps.com. They're essentially the monopoly. Yes, you can buy postage from other places, but they still are effectively the monopoly of where you buy postage to ship all of this e-commerce goods. Second thing is they signed up with UPS. We don't need to remember how UPS absolutely slaughtered earnings. They are doing a ton of business and they just announced price increases for the holidays. So I would anticipate that they continue to do well. They had an revenue growth of 49%. 49% last quarter. I think it continues. All of the Shopify sites, all of the Magento sites, everything else that's hot within this world, it looks like someone just tweeted that, are still using ShipStation, which is owned by Stamps. So I think it's still got more room to move. I can't see how it doesn't.
I mean, the story intact, like you said, and the trend is your friend here too now, obviously, with the stock going straight up. And it seems like the hot just get hotter and the cold just get colder. It's the kind of market where it is just paid to chase. I mean, there's some markets that, obviously are contrarian markets and chop around going nowhere. This has been the type of market, if you've been chasing the leaders, you've been rewarded. And maybe the chase, on the little pullback we have here, maybe it's another opportunity to get back in. I tend to think the trend is your friend here too, just from a technical perspective, not knowing much about the fundamentals.
Yep, absolutely. I totally agree with you.
Right, what else on your radar, Ryan? Let's just get your thoughts here. A couple stocks. What's on your radar just for, in the next immediate future here?
Our friend Amazon. So I think Amazon, It seems like it's a little dead right now, but all of our clients that sell on various platforms, whether it's eBay, Walmart, Etsy, they continue to see aggressive growth. I think they are the most poised to capture Q4, just because they have, the large delivery machine. We've also seen them start to pull back on how much product sellers can ship in, which means that they definitely are going to be stocked across their 75 or so warehouses within the US. Shopify, the trends still continue to be incredibly strong. So more and more people continue to buy, continue to use e-commerce and avoid the stores. I think it's gonna continue to be very strong. UPS. So as you can notice the themes here. Everything's around e-commerce. UPS. Up front, we do have a couple UPS stores, but all of those Amazon returns are coming in through UPS. UPS announced the price hike for Q4. I think they are going to continue to be very, very strong. And then one that I think is very interesting, and Dennis, you and I talked about this the last call, is we got Peloton coming up with their September earnings. So that trend, shall we see that it continues? But anecdotally, everyone I talk to is still talking about Peloton, whether they're buying the bikes or, more importantly, now starting to use the app for off-bike use.
Yep. I still got it. Full disclosure. I bought shares of that a long time ago.
You got the bike too. You're all in. You're
I
long
got the
bike
yeah.
and you're long the stock.
It was pouring yesterday, and so we got shut out at the pool, and Lisa hopped on it, and I'm like, I'm going to wait till the sun comes out, and I went on a bike ride. So I have to wait. I mean, once it gets cold out and stuff, I'll go back on it, but I don't know. But I also want to ask you about a dog that you warned me about, a dog with fleas, and Dennis is teasing me about it. What should I do with my L brands here? I bought it bad, and I saw it go to single digits. It's back up here.
Cut the loser, Joel.
Hey, they have earnings this week as well. I didn't mention.
What do you think? Should I get rid of this puppy?
I would. I mean, I work on 34th Street right across from the big Macy's. And as I left the subway station on the corner of Broadway across from the Macy's, a huge boarded up Victoria's Secret in pink. I think it's Dunzo.
Okay.
I hate L brands, but I've hated it for a while. I was right for a while. Obviously, in the last 2 months, I've been wrong. I'm going to stay on the hate train on L brands, though.
All right.
I got to say, Joel, I'm a little surprised. You can figure out Peloton, but you can't figure out the stamps.com. I need your user ID. I need your user ID because we gotta have a little race.
If I was Jason, I would put my cell phone and that on the screen.
Oh, yeah, he'll just tell you right on the show for the other 2,000 people to listen to.
Yeah. Be going into my account using my free stamps. I don't want that to happen. Any dogs, you think that might start barking? I thought that someone picked up Gap stores in
Dan Loeb.
Dan Loeb. What do you think? Is there any dogs that are gonna bark?
It's a turnaround story here somewhere.
I actually shorted Gap with the whole Kanye news. I've closed on that short because it continues to go up. I can't see how that one does well. I think one that's kind of quietly potentially going to do something might be Foot Locker. Every time we've spoken prior to this, I've never been a fan of Foot Locker, but I think it's one of those that might surprise us to the upside. I think on the home improvement space, and this one's an obvious one, the Home Depots, the Lowe's, we should see relatively decent numbers from them, given that, everyone's stay at home and they want to change things with their home. Kohl's, Macy's, all those guys, I would still steer clear from. The Best Buys, the Lululemon.
What about Best Buy? I want to ask you about Best Buy. This thing is on a roll, and It's not back to school season, right? What is it? Are people having to buy more stuff to be at home? And I also just want to ask you about the back to school season. I mean, you're not going out and getting school clothes, right? If in a lot of areas, how do you think that? I mean, that will be more reflective in next quarter, right?
Yeah, that'd be next quarter. Best Buy, I mean, it's surprising what they've been able to pull off, especially given usually we see a ramp in electronics for the summer. We also see obviously the Super Bowl ramp, but they just have lived and died off of this work from home theme, and they continue to do very, very well. What you find is those companies or those retailers with a strong .com have been able to overcome weak in-store sales. And now with Best Buy doing a more aggressive approach to reopening stores, I think they will continue to do well. With that said, I mean, they're above 100 now.
A lot of high expectations priced in, maybe.
Exactly.
And just sports. Oh, I'm sorry, Spencer. Just, everything that's going on with sports and college football and, people not buying. I mean, who's going to be affected most by, at least the slowdown in sports here temporarily?
So, the Dicks of the world, which I'm surprised at seeing that strong of a recovery. I would probably steer clear from it because that will manifest itself in Q4. I definitely wouldn't go anywhere near anything related to sports.
Wow. All right. Ryan Craver is a retail expert. He's the founder of Commerce Canal. Ryan, thank you so much for the time today.
Thank you, gentlemen. Have a great week.
All right, Ryan. Great. Thank you. Right. S&P's just, marching here. We're up 15.5 handles. Really, any kind of dip is buyers come in. We're looking at a 8-star level here at 82.50. That opens the way up to 3,400. Now we're only 6 points away heading to the open. Very interesting setup here. Triple D, what else are you seeing out
Hard
there?
to be bearish. I mean, I don't see the catalyst here. Obviously, the market's not concerned about COVID. We're going to start talking about the elections here eventually. We're coming out of earnings season. The earnings were not as bad as some people expected. Yes, we're coming into retail earnings season. That's going to be a driver for retail stocks. But I just look here, and there's still a lot of bears out there. Obviously, a lot of bulls as well. The only bear, the only thing that I can think about if if the market really wants to turn around and sell off is just that maybe the long trade is a little bit crowded. That's pretty much the only thing I can think of as an immediate catalyst. There's always a catalyst coming up, and maybe it's a trade war with China. Maybe it's something else that we don't even know about. But it's just difficult to fight this tape. Like I said, people say, logically speaking, it doesn't make sense that the market's making new all-time highs when we're all still kind of in a pandemic. I mean, the market doesn't trade on logic. It trades on momentum. It trades on supply and demand. And right now, people are just hungry for stocks.
All right, Spence, we got about 7 minutes here. Really, any negligible ratings to cover?
I mean,
a couple good ones.
Yeah, I think the big one this morning is probably Overstock, and it's not a.
Forgot to ask him about Overstock and Wayfair.
Not a rating; it's an initiation. Well, it's an initiation from Piper Sandler this morning on Overstock with an overweight rating, and they gave it $140 price target.
Analysts chase price and analysts drive price, and it's up $6 because you got another analyst coming out. And this is what continues to drive stocks and why the strong get stronger and the weak get weaker, because the analyst community is no longer contrarian. It's momentum based, and they jump on whatever train is moving, and they keep it going. And we know analysts are still very influential, whether you agree with them or not. They move price. So you think about, the whole cycle of when a stock starts going higher, the analysts have to raise their price target so that they don't look dumb, and they have to upgrade so they don't look dumb. I mean, we just saw it with Tesla, with two bulls throwing in the towel, or two bears throwing in the towel. Two analysts who were underway on the same day, both going to neutral because they can't fight it anymore and they don't want to look dumb. So they've got to, come around and upgrade the stock. So, I mean, it's the same thing with Overstock. You have a lot of analysts and going to be chasing price here now. So it's tough to get on the bear theme and say, okay, the story's over and it's done. I mean, the Overstock story is still, from even a logical perspective, people are buying stuff online. So the crypto thing, I don't know how much overstock still involved with Bitcoin, but it doesn't hurt that Bitcoin's going up as well. It's hard to be bearish overstock here.
All right, and trading up here, let me get the pre-market chart to give you just any levels if you're interested in trading this. Bumped its head up against 102, back down $2. So I think that 102 is going to be significant. On your dailies, what do you got on your dailies? Dailies give you a 102.39. I think you're going to have some problems getting through that 102 here as things stand right now, just on an analyst upgrade. And Wayfair, it's tried to pull back here, but
it's the same thing. It tries to pull back. What happens? People start coming in and buying it again. So if you're trying to short this thing, you're fighting the tape. And it's been tough. And yeah, you know, you get the break, you know, they do an offering. And the same thing with overstock. Why did those stocks go down? Because they did a secondary. They were raising cash at a high price. Smart of the company. But they can't even keep the stocks down. I mean, sometimes you see these secondaries, and that'll be like, you know, remember the GoPro, you know, insider selling, a secondary comes out, and that's the top. In this case, it doesn't even stay down. The stocks don't stay down. We saw the same thing with Shopify. Back when Shopify was 700, they did the offering. And it kept it down for 2 days. And 2 weeks later, the stock's breaking out and making new highs again. It's hard to keep the strong down. Overstock and Wayfair are just strong. Yeah, did the runs overdone? They've been overdone for a long time. But that trend, if you're long, is still your friend on both those stocks. So I would say if overstock ever came down and breached that double bottom at 85, that's where I would say, okay, story is cooled off significantly. It's like TDOC. TDOC is a broke trend now. TDOC did get upgraded here today, and that might give it life because it's been in an ugly downtrend for the last week and a half. So maybe, you know, it can turn around a little bit. Ever since they did the merger, it's been straight down.
Yeah, they killed it.
So now you get an analyst coming defending it. That can turn it for a couple of days. Is it going to show it life? Well, it needs to get back up over 200 and start holding over 200. But, you know, when you get an analyst, an upgrade on a stock that's obviously been trending down, that can have an effect for a couple of days. So I wouldn't be surprised TDOC obviously showing strength off the upgrade, but it could sneak its head above 200. Remember, if you're trading LVGO, the ratio, I believe, is 0.592. So obviously that's going to be trading off a TDOC price. You know, and there's a nice, you know, risk arb trade for the risk arbs out there. But, you know, there's an example where a stock broke trend. Overstock and Wayfair never really broke trend. So that's why, you know, these stocks have bounced back quicker. Once they break trend hard like TDOC did, it's like, okay, well, now you've really got some people caught. Who's caught in Wayfair? Not very many people, if you're in long it, because the stock is right there near highs. Few people caught in overstock, but it's starting to come back here too. Less people are getting caught, and it wasn't down there for as long. As the stock stays down there longer, you know, it's more heavier. Yep. Yeah, it gets heavier too. So
who's the analyst on this one?
On the TDOC?
Yeah,
Spencer. I forget already.
Let's see here. Going to the pro, we've got Credit Suisse this morning.
I mean, to me, this is what analysts are supposed to do. You know, I mean, they're making a call here. I don't know where they were at before this, but the stock's down. It comes to an area
down 60 points from the merger.
Yeah,
they're saying it's enough.
As opposed to upgrading and raising your price target on NVIDIA right now. Like, okay, well, what if I sold at 40? This is what analysts are supposed to do. I applaud this move. I'm not running out and buying the stock or anything, but you know, you got to respect a move like this. You know, it's near the low. If you're jumping in here, I mean, giving up the edge obviously as it's moved away. 195 is what you hit in pre-market. I think the other one, 198.21, that's your 2-day high. I don't know what the short interest in this one, but you start getting back over 200. You know, it's easy for shorts to cover on days like this. You know, they put the bids out and they get peppered, right? And their bids are getting crushed and they're getting crushed and they're getting crushed. On a day like today, you know, even if you took a red candle on Friday, looking for it to take out the low of the move, you're buying into an up market, which much more difficult.
It helps a bit. The one thing I will say is this trend towards e-health has cooled off. It's not done. Yes. The story maybe not over, but it's cooled off. You can look at e-health, the stock, EHTH. That one's just, you know, $130 a month ago. It's $70. I mean, it's been cut in half. So
Lisa doesn't use either of these for her. I forget what the name of the company that she uses for.
It's concerning when it's broken trend now. So I'm more apt to sell the rallies in a TDOC as opposed to sell the rallies in a Wayfair that hasn't really broke trend.
Correct.
I mean, this market's so trendy, and you break trend and people and they get through the moving averages and people get the hell out. And I mean, that's the difference here is I kind of feel like, you know, the e-health story has cooled off a lot more than the buying stuff online story.
All right, real quick, Dennis, you mentioned someone asked you about on-track OTRK.
Yeah, Twitter follower Fishmonger, I believe, asking what's the technical and we sort of to a technical analyst OTRK, Mr. Elconin. What do you think of on track? I do not follow this company.
This one had earnings, and that was why I blasted off.
I'm sorry. Give me the symbol again, please.
No. This OTRK, and that gap there on that chart in OTRK is because of earnings on August 5th.
So he wants technical on it now.
I mean, it had the pullback. It looks good. I mean, it's trading up in the pre-market. You got a pair. Look at $50. You want this thing to close over 50? I mean, didn't quite fill the gap. I would have been close enough though, filling the gap. But you know, for this one, if you didn't want to sell at the top and you want to see what's happening here on this way back up, I'll just do. Oh, I wish I would have done that a little bit different. Man, I wish I could get these lines right. But you could just figure that you're 50. The bottom. Now I have to go and do the actual math.
We're gonna give you a promise of the lines and I screwed them up. That's okay though.
Well,
we get the idea.
It's easier to do the math. And you see, you went from 64 to 42, 22-point move 11, you know, 52, 53. I mean, that's halfway back. This is going to be a tough candle to work through.
Yeah, it is.
Yeah, that's a tough candle to work through because you got a lot of people. But 52,
you got people caught.
Yep. But it looks good. Even from a shorter term perspective, 2 highs at 50, double top. No such thing as a triple top.
Yeah, you get through 50, you can work through it, but it's not easy sledding was what Joel's saying. When you see an ugly red candle like that, there's a lot of pain in that candle. And it's tough, you know, as it starts to get in that area, people are trying to get their money back. So, and obviously people who bought, you know, the blow off top up there above 62. So as you know, you might have a little bit of room to the mid 50s on this, but I think immediately you need to get over 50 before even thinking about getting bullish on this. Because if it can't get over 50, it could just turn around and roll over again. So I would say I'm not even looking at this until we get a close above like 51.
All right, I know we didn't get too many tickers in the chat, so I've written them down, and we'll get to them in the afternoon show at 3:40. In the meantime, we appreciate all the love you give us in the chat.
We like the hate too.
Well, we like the hate
Dennis,
too.
We don't mind.
Dennis, you get the hate. Hey, Dennis, do you want to talk about?
I always get the hate.
Do you want to talk about valuation of stocks in 2000?
Okay, you can show
not right now.
You can show us love by hitting that like button, hitting the subscribe button. We appreciate any and all likes and subscribes. You can email us if you'd like, premarket@benzinga.com. You can tweet at Joel at Spoos, SPUS, at Triple D Trader. For Dennis, I'm at SJ Israel. Thanks to our guest today, Ryan Craver. Please remember that all the information from our show is meant to be used as informational purposes and not for investing or trading advice. Everyone have a great rest of your Monday. And Joel and I will be back on our YouTube channel at 3:40 p.m. Eastern Time.